Welcome back to Vatsa Market Foundation. I am Bighnesh Vatsa. Before we begin today's session, I want to address the previous video. I reviewed that footage and I noticed that background noise and the audio quality was not good. So I apologize for that. We are working on upgrading our studio environment. Thanks for your bearing with me and build this foundation. Now let's go to the work. In last video, we stripped away the illusion. We learned that the stock market is a machine and an auction house. We learned that price and value are two different things, driven by the wealth and fueled by the fear and greed. But today we have to look the mirror. We need to define your role in a machine. There is a question that destroy your bank account in any market crash. The question is, am I a trader or an investor? Too amateur mixing these two things, you will get hurt. Today we are going to draw the hard line in the sand. We are going to deep psychology, the mathematics of the strategy of the both. Chapter 1, the investors. Let's start with investing. What is the soul of investing? It is ownership. When an investor buy and stock, they are not looking for the computer screen. They are just looking at a business. You buy a piece of empty land on the outskirts of the city. You plan to build an apartment complex here. You know that it will take a 5 year to get the permit, lay the foundation and build the tower. Do you go to the land every single day? Check the price of the dirty and the panic. If the price drop by the 10 rupees, no. You don't care about the price of the land today. You care about the potential of the business in a 10 year. This is the investor mindset. They look at the foundation analysis, balance cash flow, management quality, market share. They want to get rich, but they are willing to get slowly rich. They use the most powerful force of the universe, compound interest. If the market crashes tomorrow, the true investors celebrate. Why? Because the business that love is on the sale at the discount. They buy more. Chapter 2, the trader. Look at the trader. Trading is not about ownership. Trading is about the opportunity. As a trader, I don't fall in love with a company. I don't care about if they make life-saving medicine or useless plastic toys. I don't care about the CEO in a genius or an idiot. I care about the only one thing. Is the price moving today or not? Think of a retailer who sells shirt. He buy the shirt for 500. He want to sell it for 800 rupees. Does he want to keep the shirt for a warehouse for 10 years? Absolutely not. This is dead money. He want to sell it fast as possible to free up cash and so he can buy the next shirt. This is us. We are a merchant of price. We use technical analysis, chart pattern, volume, momentum. We are not trying to capture the growth of the company over a decade. We are trying to capture the volatility of the human's emotion over a day or a week or late to late a month. For an investor, time is a friend. For a trader, time is a risk. The longer the trader hold, the more chance there are for a whale to splash the water and hit his stop loss. Chapter 3. So why I am spending the entire video in this? Because 90 of the beginner lose their capital due to the specific psychological trap. I call it accidentally investor or it happened. Listen closely because this will save your money. You look at chart, you see a stock moving up, you say I want to make quick profit. You enter a trade but you don't have a plan. Sudden the market turn, the price drop and they are drawn by 5%. A disciplined trader would cut the stop loss and say I was wrong. But the beginner has an ego. The beginners say, no, it will come back. I will wait. You wait 1 week, the price drop by 20%. You will wait by 1 month, the price drop by 30%. The pain of selling is too much. Stop. You didn't analyze the fundamental. You did not plan to hold or for a 5 year. You are only holding because you are afraid of taking loss. You started a trading and you turned into investment to protect your ego. This is how money is now trapped in a bad stock for a 10 year. You can't use your money to take a new trade. You are a bag holder. So, who are you? You need to decide before you click every buy button. If you are an investor, you are building wealth. You ignore the daily red candle and check your account once a month. If you are a trader, generating income, you are a sniper. You have a specific entry and a specific exit. If the trade goes wrong, you kill it instantly. You have no emotion, no attachment. Keep your investment capital separate. Our focus is trading. We are here to execute. In the next video, we are finally going to open the toolbox. We are going to talk about the candlestick pattern. We are going to talk about the candle. Most people think they know what is the candle, but they don't. They see a drawing. I see a war story between the buyers and seller. I will teach you how to read the story. If you are serious about making money, subscribe to the channel. Share this video to someone who need to hear about the market. We are building a community of discipline here. My name is Bighnesh Vatsa. Stay disciplined. I will see you in next video. Thank you.